Good morning and welcome to today's live show. If you're not watching live and maybe you want to catch the end of the day with us, we are streaming the close, the power hour over on Rumble. The link should be down there in the description. If you would like to join us over there, just hit the follow button over there. Completely free. Another just open stream for us to connect and look at stocks together so we can see if we can figure out which way this thing really wants to go. But at the end of the day, I think we're going to end up squeezing. So no matter what goes on, I don't care if we even cut the low at this point. I really think that this is going to be a moment where people are more caught off guard to an upside move than a downside move. But that being said, if you guys want to join us over there, we will be live and for the Rumble live show later today. I will be hopping on pretty much right at an hour before the close, right? Lately, I've been staying on there for a couple of hours, going on a little bit early, but today I'm not able to, so I'll have to extend that out. But we will give the full power hour its time, right? Because that's when the volume comes in. So what are we overall talking about? Well, we got daily expected moves for you in red, the usual, right? And yeah, they've actually looked pretty good, pretty sizable. So we still can be in some rip around kind of behavior. We still could be in some kind of rip around behavior, right? These are the two big warning flags that I have planted in my brain and gone, okay, if those things happen, then I don't necessarily want to be holding on to those calls for too long. But if this can just curl up, I think we are at a point where we have potential to, as everyone wants to load up those shorts, maybe we go fill that gap and then we see this thing turn up into positive territory. But we are open to sweeping the lows first, creating that daily divergence at the low. These are some very, very good things to be aware of. But at the end of the day, most of these things are going, okay, there should be support down at these levels. We'll see if that changes, right? We're not saying if the daily crosses down, that's a good time to be in calls. We're saying if the daily crosses down, I can treat it very seriously, understand that that could be bad, but also think, what if it's not as bad as people are saying? And that's just all that I think is going on here for possible trade setups. Is just, hey, people think it's really bad, but you see a reversal signal. So is it as bad as they are saying? And then it might turn back around just like JP Morgan did and frustrate you a little bit because you forgot to get back into it. But JP Morgan did. It ended up getting past my 250 target. It ended up happening. It just took a lot more time, right? So maybe time is our friend here a little bit, and we can just be patient and utilize time correctly. Hey, we know there's a gap down there. We know that the daily expected move is down in that area. So it's a very key time to be paying attention. Hey, Emery, thank you so much for subscribing and welcome in this morning, guys. Kim, hello, hello. Good morning, Alex and Short Fridays. Welcome into the chat. Hopefully, you guys are ready for another good day. I really thought we would get some more gapping. So, just to pull that over for you guys real quick, the economic data, right? The GDP. Overall, I was saying if we come above 2.3 but still below 3.1, that's where I think we have to really pay attention to the reaction. Are people going to react and be like, hey, it's not as bad as we thought? Or are they going to react and still be like, hey, that's lower than 3.1, which means economic slowing in some way? So those are the things that I'm mainly reading into. And the thing is with that, people could think of that in multiple different ways, right? Someone could even be thinking about inflation with these numbers right now. So decision making and how the price action really behaves here, how momentum is behaving is probably the better thing to do at this point, and then set up my plan for when I need to react. And I think that's a good thing to say. I'm going to go over and look at some other things real quick. Hopefully the mic is working. I'm not talking to myself. Okay, good. That's always a good sign. You know, sometimes we got to click and check because Luke's a dum-dum sometimes. This date has changed, okay? We have seen some updates to these levels. So let's pull this over and look at these levels real quick. We got 560, you've got 575, and you've got 584. So at the end of it all, we know that 575 is now important right here. And we know that 560 is important down here. So what if we get to one of those levels early on in the day? That would be very, very interesting, right? If we get to one of those levels early on in the day, we can look for support to come in and look for bigger time frames to see good moves up. That would be the way to go, I would say, higher. The way to set up the trap to go lower and then fill that gap is probably you make that upside move and then you hard reject from that area on the 30 minutes. So we can pay attention to 575. We can pay attention to 560. Both of them are right around our daily expected moves. 560 is a little further away, 3 points lower, so just be aware of that. to the downside, that 560, it looked like it overtook that 550. So someone really piled on a 560 put yesterday, it seems. Some kind of short position there. Yeah, put position looks like. Hello, traders. I think we're bearish going into the open. Yes, you are technically bearish going into the open, right? These things are confirmed down in negative territory. 2 hour is creeping down like it wants to maybe go through negative territory, right? The daily is showing rejection, hard rejection off of the 200. So you are correct in saying that as the price stands right now, bearishness would be the easier avenue. Bearishness would be a continuation of what we saw yesterday. We did not see this thing turn up yet. Dump the market open ate that play. I think if they really wanted to fake people out today, I actually like the fact that it's not like leaving a massive gap. I actually like the fact that they're going to let retail maybe see it all morning if we come to the downside, and then we could end up just turning right back up. And then on Friday we get new data and we see what happens. But yeah, as far as it goes, right now you're leaning. The signals would say bearish, but we're looking for the reversal signals. We don't have any just yet. And now we have that gap that's always going to be lurking down there. So something that would be interesting is let retail see a bunch of bearishness, right? Let retail see the downside in the morning. Let them place their bearish bets. And then we end up doing this maybe tomorrow or on Monday. So good morning. Good morning. Let's see here. What else we got? Oh, volatility. We can look at that for a brief moment here. Volatility, look at the next push higher to get to that 1950. We can see that this is still positive. We have a pretty good reading on the RSI. So we'll look for a divergence here, actually. If we can do something like this, even go to that 1950, and then we actually turn down, that could be all we get, and that could be the filling of that gap. So I'm gonna be keeping my eye on VIX because it's gonna help me see, okay, is there a divergence here that's not showing up on the SPY? How can I read into it at this point? So volatility would be a good thing to watch. If you want volatility to subside, you need the 2 hour to turn down. And that's why a little 30-minute divergence like this can turn a 2 hour down. All right. We don't want to ignore the fact that it's getting to a perfect level, consolidating, and maybe about to break through 20 again, right? If this gets more volatile, that's where I react. But as of right now, this doesn't seem like anything that needs to scare me as much as it seems, right? Is it really as bad as people are saying right now? But we'll be watching. We'll be watching. Pull this up real quick. Yeah, I'll keep volatility here because it looks like it really wants to turn up. Let them see the sell in the morning, create the reversal signal on the VIX, and then maybe just something happens, Kind of shows all kind of weird candles on the 1 minute that don't show up on any other charts. Yeah, you can probably see it on different platforms. Everything's going to be, more platforms to look at, more glitches can happen. The glitches you pay attention to are when they're happening in multiple places at once. Do this so I know what I'm on. The dollar looks like it's at a level where it could potentially find that support, but has reversal signals on the 2 hour as of right now. The 4 hour chart showing slight reversal signals as well. The daily chart is bouncing here. The 10-year yield is bouncing here. These could all be right shoulders. I wonder if the dollar is going to fall. Hopefully it's not going to fall dramatically because that would mean, ooh, we might actually be you don't want the dollar, you don't want your currency to fall very dramatically. That's not a good sign. So it looks like it's going to turn around soon. Hope maybe it just breaks through. Nvidia's getting close to the monthly. You have a few days left, and Nvidia's it's getting there. It's getting there. It can fill that gap for sure. That gap towards 108, towards 108.70 is not impossible to happen. But Nvidia is going to the weekly expected move as of right now. So if you look at NVIDIA, you're going, okay, this is dropping down, dropping down. What do we say? Hey, well, you close below these levels. You close below 115. That's going to be a problem. You need to buy above that really quickly. You're not able to, so you just continue what you're doing. Maybe you shoot down and fill this gap, and then we see what happens, because this would take you outside of your 68% zone. This would be one of the first moves outside of the zone, besides like AVGO. So weirdly enough, another Broadcom over here outside of a zone as well. So you do have these stocks that are saying, hey, we're experiencing something crazy right now. We need some good news, is pretty much what that's saying. Drink some coffee. Yeah, we can look at Tesla. Tesla to me, still holding really, notice it's holding really well. Notice it's holding really well, and you see this bounce right here. That's directly off of, I'm pretty sure, yeah, it's pretty much directly off of a weekly expected move, which is just fantastic. So you've already seen something crazy. This is why I said, like, Tesla's the one that I'd be like, ooh, really thinking take profit, leave runners, looking for pullbacks to then get back in. And so this could just be that first pullback, right? We did see the divergence on the RSI, the rejection on the MACD. So this could reverse down. So we automatically know, okay, the 2 hour could cross here, and maybe we go into a 2 hour pullback. Where would that get us to? Well, that would potentially go down to 250, 249. That way you come down like this on the 2 hour, and then you're able to cross back up, and you see some good stuff to the upside. But this is just the first level where you're going to create potential, yeah, not reversal, but potential structure to head higher, right? This is a great level to get to. You got right to, I would say this is a big box. So you could really point to a lot of different supports and resistances, say, in here. But the fact that you even just got to that point, and then you see that pull back, it invites the fact that you can take this out. And I think that's kind of a big deal for Tesla. So I'm looking for Tesla to remain strong here, to be totally honest. I think that would be fantastic. It's just how much of a pullback is it? Is it just this little 30-minute and then it rips again? Or do we need to pull all the way back down to 249? That seems like the little game you're in for now with Tesla. $566 for the SPY rebound. We didn't see a lot of things going on, but I mean, this is going to be a highly congested area, in my opinion. Right when you get into here, I think you're right around some key stuff. I think especially if you head lower, you're heading down into these areas, which held as pretty much good resistances, tried to be support, lost it quick, take it back, use it as support again, use it as support again, gap below it. So very important where that red line is. So 562.93, I really enjoy that number right now. And it's right at the gap fill too, which is just awesome. The hell's going on with GME? GME was able to cross down on a 30-minute, which is one bad thing, but two, they technically didn't dilute, but I think they did a private share offering for like 1 point something billion. And people are going to read into that negatively, right? People are going to really read into that negatively. But they're just raising capital to purchase Bitcoin, it seems. So I don't think that's like crazy. Like I said, this is a great thing to do, but you didn't continue it, right? You need to see something crazy right after seeing something crazy. You need to see this thing just double down and go. And a piece of news like that can just give someone a reason to sell. But if this would line up, right? Maybe we left another big ass gap now, right? We're in this area, so it'll be weird. But the funnier thing would just be, you know, do you see some craziness in here and end up doing this, and then you curl up around that 420? That's what I think would be really funny. So what's going on with it? It hit exactly where we expect for the week, and then it got bad news. The exact same thing happened to AMC, if you recall. The exact same thing happened to AMC. AMC was about to break through, looked fantastic. It was like, I'm going to go. And then right here, it went. Right, diluted the stock. They actually, you know, potentially they diluted to pay for debt, whereas this move is more just a private share offering to potentially make a purchase of Bitcoin. So it's a little bit different, but same type of reaction. So this back in the day, 550 was a weekly expected move. We shot up to it. AMC was going to rip, and then boom, they announced something bad. That's how it works, man. Gotta be quick with it. Seeing a squeeze is a very 1% chance type of thing, and seeing a mega squeeze like people expect for GME is probably a 1 in 10,000 kind of thing, which means probably if GME did squeeze to $100, I think like 1 out of 100 people would make money. Yeah, I do. I just think 1 out of 100 people would be making money on that move, at least in options. What do you mean people don't move it in after hours? It trades in after hours. AMC doesn't, I don't think. Like overnight market, is that what you're talking about? Video going to 100 soon. Yeah, we'll see what happens for the rest of the week. The way that NVIDIA goes to 100 is makes a divergence here. So you might be right about the 100, right? This is pointing straight down, down, down. It could go all the way down to 100. Yeah, that could happen. Just watch if you create reversal signals. Not oversold by any means, but as of right now, we're just paying attention and being like, hey, where are we? We're at a weekly expected move. So we're heading into Friday. Not much time left. See if we fill the gap. Maybe we leave it behind. Who knows? But if we see support come in and see momentum shift up, that's a good thing. What up, Jose? How you doing? Welcome from California. Let's go. Let's see here. So some people wanted to look at Nike, it seems like. Let's go look at Nike for a second here. 30-minute has something. At least you have something. 2 hours is still very deep. This could still have a lot more time. It could not, right? That 30-minute could be enough. But for now, you would say, oh, some kind of move that then drops down one more time, creating that solid base would be better. This is why I think we were more paying attention to Nike as investment, correct? We said, options would be a little bit tough with this because if you look at the daily chart, it's way down there. So if you're more looking at this from the investment perspective, I think it's better off. We do have like weekly divergences all across this. So I don't think this is a bad area to be making decisions. I mean, you're pretty much at the COVID lows, right? So I don't think this is a bad time to be thinking about it. I really don't. I just think Nike might be seriously affected by tariffs depending on the products they use because the labor and all that good stuff. So we'll pay attention to it, but this more so looks like investment decision making than a quick easy option. Now, if a 2-hour signal would pop up, then we would say, the daily can curl up into positive territory. So if we see something change, we can. Right now, you have a 30-minute suggesting a 2-hour move could come, and you haven't seen much of a base form, so that could be a very lackluster move. So I just spread it out and be like, hey, if I'm seeing all those divergences, even if it hasn't confirmed up, is this something I'm comfortable with holding? This is more investment, I think, for the time being. Dividend yield indicated 2.43%. So not the best, not the worst. Thank you and good luck on your trades. You too, Jose. I'm kind of taking the chill route and just like making my macro assessment, placing my money, and then letting the nonsense go. Trying to trade a little differently for a second here. Tesla is seeing some more support come in at that weekly expected move as we open up. Looks like Tesla actually is seeing more positivity while everything else kind of falls. That's kind of funny. So we'll see if that lasts. I think a 2-hour pullback is still likely, and I'll keep my eye on volatility over here again just to make sure. Volatility trying to break out as of right now. So it looks like that lower expected move would be probable. We'll see if this fails. Best way for a newbie to take positions right now. Invest, don't do options. The best position you can put yourself in is one that has a lot of time if you're new. If you start to play with time in the early parts of your trading, right? I started out not doing options for years. Then I started to dabble. Then I got into them and once I actually made a strategy that made total sense to me, right? The way that you start trading is not, oh, I take a shit ton of leverage, then I make big money, right? That's not really the recipe. The better recipe and the more successful recipe is I use time and take these and I utilize time with investments or maybe longer term swings. And then I make a little bit of money. And then as time progresses, that starts to get bigger. And then I can make more money. Right? You could end up not doing options at all and you'll probably thank yourself later in life. But I would say just get good at just trading stocks and getting good at entry and handling your emotions. That's much better. Day of expiration to close. So day of expiration to close. Now that's very simple for me. I'm going to try never to do anything below 4 weeks, 4 to 8 weeks, anything in there. Why? The only thing I care about with the expiration is the amount of time. I want to give my trade the amount of time. To use an example, it's JP Morgan. JP Morgan, I would have made money on this trade, right? I took it at the reversal signal down here. It gapped down, so I managed, but it made the same reversal signal right here, and I didn't pay full attention even though we talked about it, and technically I should have been back in, but here's the kicker. Because I bought enough time, I thought I didn't, but because I bought enough time, even that trade right here would have made money here now. If I would have just taken my time, not freaked out a little bit more and managed real quickly and then forgot about it. Right? Now, I like to manage. I personally like to manage, wait for the reversal signal to pop up again, and then take the play. So technically, I would have taken a loss in here, and then I would have gotten back in at a little bit lower, and then that would turn to the upside, right, with the 2-hour divergence. So that was a big mistake that I made, but for a good example, the reason that I use now, and I'm going to solely try to stick with 4 to 8 week, even more if I need to, is just give yourself the amount of time and make it stupid, right? Even if it's a 2-hour move and I'm like, oh, there's a 2-hour, a 30-minute divergence. Okay, awesome. If I buy 4 weeks out, is that still not going to increase in value? And maybe if I want something to increase in value, I can reach a little further away and see if that moves a little bigger. Or do I want to just take at the money and then let that thing ride for a second and then take my profit, right? You have to make your goal for the trade. But overall, expiration's about time. And as far as a strike to pick, I would just say, look at the signal that you're suggesting. And what I like to do is kind of imagine where that weekly expected move will be next week. Like if we were on Friday, I wanted to take a trade and we were landing and more curling up like this, I would go, oh, okay, that weekly expected move could be at 590. So if I wanted to, I could just go for the strike of 590, right? And then if it goes up enough and it's worth money before I get to 590, okay, cool. Plenty of reasons to take profit is what I like to have. But yeah, as far as expiration goes, I just say, whatever amount of time you think you need in the trade, add a little bit more to it. Yeah, and oh yeah, that too. And your option doesn't lose value quickly. If you go click on there and you look, you can lose value very quickly in the quicker options. As you have less time, it starts to say, hey, this is less and less likely to happen. It just rips money away from you every day. But if you take further out, you can kind of sit through a lot more, manage still, but you won't lose as much value just intrinsically. I'm still digging myself out of a 100K hole. I dug options too soon. And that's fine, Robert. That is like the recipe for most people out there. Volatility is turning up here. So that's why I really try to say, even if you're starting over, right? Even if you're starting over, doing things the right way is probably a better idea, right? Probably a better idea. You would have at least this is how it would have went if you didn't do, say, options. You might have still lost all the money, but it would have been a lot slower. And here's the thing about it being a lot slower. Who's to say at one of those points you don't experience one of those 1% moments that shoots that account up, that you make the right call, right? You make the right play on maybe something like a GME, maybe something like an RGTI, maybe something like an IonQ, those type of things at the lows. You don't know. Maybe that would have happened because you put yourself in there for more time. If you lose 100K in say 2 months versus losing 100K over 5 years, who do you think had the more chance of being successful? Well, the guy who was able to stick in the market for 5 years. Sometimes survivability is just like a big trade. You have to be able to survive when crazy things happen. Still swing trading. I'm still trying to work out what options do I buy and when. So learning here. Dane, I'd say just keep getting really, really good at just regular shares, and you'll probably be better than most people at with options. You don't even have to touch them. Don't even have to touch them. I mean, the thing is, if you utilize them for maybe a hedge, that makes so much sense to me, right? I utilize them a lot for hedges, right? They're something I always do. I take very aggressive hedges because I'm like, I see something bad right now. If I see something bad very quickly, that's what I mainly care about in the early parts of my trade. So there is a very good use for people to learn options, but playing options all the time, if we get some kind of big bear market and we crash down to lower levels and I see weekly divergences, I'm going to be more investing and you won't see me doing options nearly as much. Nearly as much. Like it might just be something I do throughout the week to like make extra money for fun, because at that point it would be good. Like Willow holding calls. Yeah, well, bottom of the new channel retested. Ari's up there screaming. Wolfie boy really turned down here, really turned down. But is it doing something that's different from the market? Not really. Like really looking at that, it's not doing anything different from the market. So I just think that's interesting. But we'll see. Like we said, the 560 level is something to pay attention to. It is pretty far off from our daily, but it is within the block that is at our daily. So we'll look at it here. Heat map most neutral and mostly balanced green, except. And the only thing is, VIX is surging. So this will be a good time to see in about 5 minutes if this kind of drop is causing people to get bearish, because that is kind of surging up to 1916. We're looking for that to get to 1950. 36 weeks out, 10-15 out of money. It's a cash machine. See, you figured out your thing that works for you. And it sounds like the way you talk about it, very smooth, very calm, sounds like it doesn't stress you out, and maybe you can control your time a little bit, which is just great. Like, I can't hate on that, you know? I'm like, sick. So this is dropping down. I'm keeping my eye on volatility over here, seeing if we get rejection soon. I would say that rejection could come in at 1929, so just a little bit higher up, which means just a little bit lower down, and we're filling these gaps. So on volatility, you do see the gap shown here. So I think it would be interesting to get to that level, but I'm looking for that 1950. I think 1950 for volatility looks nice, and then we'll see if that turns back down. As of right now, curling up on the 30 minutes. So this is the worrisome sign. We want this to turn back down if you're holding on to calls, right? If you're holding on to shorts, you want this thing to scale up and break through this move and curl over a daily chart and go down to 550, right? Hey, maybe you're betting on that. I could see how that could happen. But if that's going to happen, I think that happens more now. I don't think that happens in a month or two. So I can sit there and we can disagree, and I can agree that could happen, but I still think we're going to end up over here in April. That's called it expires in 2 months. I mean, started to squeeze, so I get it. How, it's kind of about resolve sometimes, but if you see your reason to get out, right, have a plan for if it goes wrong. And the funny part is, again, the Psychology of Money book came up again. I was reading it again last night. Guess what the literal chapter is about? Plan the plan for if the plan goes wrong. That's literally a chapter in the book. It's crazy to me that it's got to be like 70% of what I've read in there is like lining up to what we say here, and I think it's amazing. I think it's so insane. Now, I think something that I need to get better at is managing time a little bit better. And I'm very patient, so you can see that maybe I'm a little bit closer to being able to manage that a little bit. But I just think that's super interesting. We're seeing things line up very well. Excellent book. I'm just finished with the first 2 chapters. Aren't you digging it, RTV? Doesn't it make you think like, oh yeah, there is some stuff out there. You literally just can't be 100% sure about anything always. Certainty is not a thing because bad things can happen randomly. There's always those 1%, he says, tail moments. Maybe you're not there yet. We'll see, but it's good stuff. Dang, I was looking for a big rip, but it's hard to, maybe it's hard for you to see which way this market wants to go. Maybe spreading out the time frames is a good thing. I mean, if you really look at this, and I'm in calls, right? Amazon, things like that. All right, cool. I'm in it. Well, at this point, it would go, hey, in 2 months, do I think we're going to be up here? In a month and a half, do I think we'll be up here? In a month, do I think we'll be over here? All right, cool. If that's what I'm seeing down here, then I can hold on to my play and just be like, all right. Now, is the 2-hour crossing my reason to the plan is going wrong, right? That's the whole point there. You guys would really like that section of the book because it's a lot of things we discuss here. Is the plan going wrong already for your plan? And that's what we need to understand. Also, good morning. Nice, Noah. Yeah, if you spread things out, you go, okay, well, the daily just confirmed up. The daily's pulling back. There's a gap there. Do I need to be worried yet? I probably need to be worried about down here once we take out this right here. So maybe I can, if I want to be risky, I don't mind losing a little bit. I give myself that margin for error. I give myself that ability to be like, all right, I'm willing to risk until this area. And then it breaks through that and goes down. I can sell, and then I can go like this and get right back in if that thing turns back up. Right? There's always a type of plan that you can make, and I would just say that's a very good thing to have, is a plan. Looks like we're trying to fill on the wick almost. We need to see that thing drop just a little bit lower. Volatility already running its head into something here on this first 5 minutes. We'll see. Yeah, RTV, you're just going to like it more and more. I'm going to read it in the middle of the day. I keep reading it at night, and it's making me think too much. It's kind of a thinking book. Nike still looks like a weekly investment. Like if I'm looking at that level, it's a COVID low. I see weekly divergence. I'm going, hey, do I want to invest in this? I think it more so looks like an investment than an option, unless you're doing well extended out. I ordered the book last night. Jack Katz, I think you're really going to like it. They show the differences between someone who holds through risk and someone who doesn't. And the difference is like big percentages. It's like that person makes like 40% more money or something. It's just because it's so hard to catch those rip and rallies. So if you accidentally sell lower and then you buy at the higher point, hey, you're losing out. So they tracked people who sold when recession was confirmed and then bought when recession was done. I thought that was very interesting. So you guys will get to those parts. They're a lot of fun. Oh, wait, how much is this right now? I don't want to do anything today. I'm trying to think. I think we still had lower, maybe, but maybe it's quick. On margin at 66 average. Is this smart? I don't know. Might be smart for you. That's the thing. There's so many variables that you could have plenty of reasons. And at the end of the day, if all your variables tell you something and you're really confident with it and you're willing to put your money there, that's kind of all there is to it. Right? If I look at Nike and I go, hey, that thing, here's the thing about Nike. At least, I mean, leverage is not usually a good idea, right? Especially maybe in this environment. Leverage is, right? That's why options are very difficult, but people can make good money in this type of moment. Okay, cool. But leverage itself is just like, okay, if that goes 50% wrong, then you're 100% wrong. And that's kind of the bad part there. Right? But I look at Nike's chart, it looks really, really low. So I could totally understand someone making that decision and then looking back in a year from now and it being very smart. Like there's a way to say, I can tell you, oh, that's so much risk, that's so much risk, that's so much risk. But if you're right, the reward would be insane. So I can't say that is unreasonable to be like, oh, I see weekly divergence and this is where I potentially want to make a big purchase. And I'm willing to hold Nike through a bad time as long as I'm willing to hold it for a while. It's just the leverage part means if it goes down, you can see some problems if that thing goes down quickly. So it's like you could make almost any decision in the market make sense. It's just, to me, there's very more obvious points where it doesn't make sense, right? This low was technically a very bad low to short at, but people were doing it. This high was technically a bad level to buy calls at, but people were doing it. It easily could have reversed around. It didn't. It went down, and then it made a new one outside of the 68% zone with not a lot of time left. So that tells us a lot of factors, and that tells us that the probabilities are pointing up. It doesn't mean we have to be right, but it would say, hey, people shorting at these levels, this would not necessarily be like a bad decision if they're right, but it's at a moment where they can be very wrong. And so that's why we had calls, and that's why we started to see good price action, right? We still can find those moments to get an edge. And that's, I think, all we're really trying to do here is get that edge and then look at the assessment. And if the assessment down at this low, right, the assessment at this low was we have a reversal signal that can cause a squeeze. Okay, is the squeeze done? Well, the 38% zone's here. I think this could go higher to at least 585. So if I take all that into consideration, we're not at 585 yet, and I have plenty of time left in the option. Right? Your thinking can change a lot. Very nice here for the SPY to drop down to lower levels. I'm already on margin call. I'm sorry, man. That sounds stressful. Weekly expected move coming into play there. What was it? Someone mentioned SoFi. Yeah, SoFi dropping off a cliff here for a moment. That's a bigger drop than you probably wanted, but still retesting in the area of the first real breakout right into here that you retested. So we'll see. But that's not a good sign, right? That's not a good sign. The daily, if that crosses, not a good sign. It really looks like now that wants to go whoop, whoop. Golden pocket coming into play. So this is where support can happen, actually. Kind of see that from the breakout area, too. So we'll see. Right now, looks really bad, looks hard, looks difficult, looks like not a lot of hints there, right? So look at something else. PCC super high. Perfect. That's what actually, thank you for reminding me. I appreciate, that's why I love this community. You guys remind me at the perfect time. Secure opening, thank you for just saying PCC, because that's what I wanted to look at. And you'll look at yesterday, 0.95. Look at today for PCC, right? CPC 0.95. Today, right now, 1.22. So people are extremely bearish right at these levels, right at the gap fill. That can be a big problem if it goes the other way on them all of a sudden. That could be almost like these walls of puts coming in. Oh, politics do matter a little bit, you know. The main thing about politics is just like, is the government going to spend more money or are they not? If they're going to reduce spending, then things can't go up. If they're going to spend more, then things will go up. This is why people celebrate Democrats in office, is because they think that Democrats make their life better. When actually, all they do is, yeah, every president adds money, spends money, but it's more about what are they spending money on. They're spending money on proxy war. They're spending money on gender stuff. They're spending money on this. They're spending money on that in all these other countries, not in the USA. If they were spending all of that money for the last, let's say we spent 39, what is it, $40 trillion? Imagine if America spent $40 trillion and maybe even did it efficiently and worked on production, manufacturing, energy, maybe even clean energy would be an okay thing to work on at that point. Still not a bad thing. We need to research and develop more to make it more efficient. I think that's great. What if we spent all that money on useful things efficiently? That would be potentially what a government would want to do. But they don't. So that's why your life is getting worse, not better, right? If the spending is bad, then you're going to just experience inflation and go through tough times. What are you going through? You're going through inflation and going through tough times. Okay? Republicans do it too. You think I'm the biggest fan of Mitt Romney, George Bush, anyone like that? I'm not a big fan of anything. I'm hypercritical about how the money is spent. If the money is spent well, the economy can grow. But if you do things that are actually productive, you can take in money. You still need income. You cannot just use tax dollars for things that make no sense, make no money, make no production, make nothing that has a value towards the debt. And that's the big issue there. So it will be in the individual person's best interest to experience deflation, weirdly enough, because of all of that spending. You need to have you need the deflation, or else your people are going to keep suffering, which actually means to get deflation, people will have to suffer to then have good things later. That's not something people like. But I think you've already been in it for a long time, right? I'm still not buying a house. I'm still not buying a new car. I'm still not doing those things. Things are too expensive. FSLR. Let's look at NVIDIA first. That's one we pay attention to. Then we'll go look at FSLR. Very good. Came down to these areas. Coming down to that actual. I mean, the support starts in here, but losing this level really starts to add more to the downside. So this is a problem. Is 108 right? This gap is still there at 108.64. And so you could still see that as unfinished business. And this is not necessarily a good thing to be that low on the MACD. So I think NVIDIA will be a little bit tougher. But if it can curl up and just see a random good move and the 2-hour starts to confirm up, then this might be a fake out. Yeah, the problem that people don't understand is the reason that there's so much, say, like hatred both sides, is because you're seeing the extremes, right? We deal with ranges and things like that, right? Okay, well, here was the trend, right? We get like Obama, then we maybe get Trump for a second, but he still spent money, and then we get Biden, right? Then we get Biden, and it takes you way outside of that move, right? Well, what has to happen usually outside of these? What happens when we see stocks go way up and up and up forever? Eventually, they get a waterfall of selling and it snaps back. So now you're getting that pendulum shift that has to come all the way back. And this is what you're seeing right now. It's just bouncing back and forth. But as far as the administration and the government goes, the pendulum is now on this side completely. And the reason you have to do that is because it has to rebalance itself, right? That's if you experience inflation, then you have to get deflation to get it to go down. If you don't, and you just go right back to the middle, inflation still will remain at the elevated levels and could continue. That's the scary part, right? That's the difference between transitory and not, right? A tariff is, oh, it's down here, tariff, okay, now it's right here. It stays. Inflation that's not transitory will scale up a lot of the time. Maybe see pullbacks, but still scale up a lot of the time. And that's scary. You experienced that. 2022 was that year. They just told you it wasn't the whole time, which is funny. Come on, NVIDIA. What up, Remy? How you doing? Toronto, welcome in. Haran, hey, nice to see you. Okay, and then VIX, yeah, still keeping my eye on VIX, right? Seeing if we get that rejection divergence at the high here. So it was crossed, now it's uncrossed. I still think that gap is down there. We need to be aware of that, but as of right now, is the goal achieved? Because you got over a 1.2. Look at that. There you go, big spike. The last big spike was March 18th. You know what March 18th was? It was the bottom for Tesla. That's great. Pretty sure March 18th was. Tesla doing good things. I'm gonna go look on my other screen. There you go, Tesla. If you're able to curl up there, not a bad sign. Volume kicking in a little bit too. SoFi bounced off the monthly. Let's go check. Yeah, it bounced pretty much right off of that monthly move. Sitting at about $12. Nice bounce. See, the people who make crazy money and stuff like that, like I'm starting to read that book and I'm like, the people who would make crazy money they see it go down to $12 and they go, yeah, I'm going to buy a call for like a month. Those are the people who make crazy money, it seems. Some ballsy stuff. That's where money management comes in. Risk management has to be in there. Position size has to be in there. But 18 equals 9. Today is the 27th. 27 equals 9. Are you starting to get it? Oh, I think there's probably patterns we're not even aware of. I'm not aware of. Tesla volatility is just nuts. Even in extended hours, it's moving up and down 5% all the time. Facts, Aaron. If you choose to trade Tesla, you're in for a ride. Tesla has consistently had over 70% implied volatility ever since I started tracking weekly expected moves for it like 2 years ago. I think maybe even 3 years ago. So yeah, so Tesla will always be a rip and rally ride of a roller coaster, but right now it's trying to use the weekly expected move as support. Tesla right now, if it can hold positive for the rest of the day, it's really telling us like, hey, squeeze could be potential here. My thoughts now are the same as yet. Nothing has changed. The gap is still there. We saw a spike up. People got really bearish this morning, so the spike up totally contradict them. I don't think you're out of the woods until you're holding above 580. I think holding above 580 is the best, but I think that's potentially coming. So, what book am I reading? The Psychology of Money. I could even go get it real quick. I'll go get it real quick because there's some cool stuff. Be right back. And we're back. Yeah, it's by Morgan Housel, just so you're aware. It's only like $10 on Amazon right now. Technically, the gap is not filled with the. Let's see. No. See, if you just hold your mouse over here, you're really easy. You're just like, all right, cool. Or you can take the closing price. The little C up there, 564.17. Then you go over here, the low, 564.94. So no fill there just yet. See, and I think this next lesson will be great, and it kind of adds to the credibility of don't try to trade with other people because you don't know exactly what decisions they're going to make. The next chapter, the first part says, beware taking financial cues from people playing a different game than you are, and we're all playing a different game. So the important part is to make sure that the information you're taking in is good for your game, I think, and I'll get into that chapter tonight. Or actually, maybe I'll read while just sitting here looking at maybe making a video for Patreon. So no, not necessarily. I don't really care too much for IPOs personally, Matthew. There's very good ways to make money on IPOs. I just think you got to be quick with it or understand what you're getting into. Yeah, Rumble doesn't look bad either. Rumble way down here. We'll be on Rumble later today. 30-minute trying to curl up, filling of gaps, a lot of support coming in. See if that 30-minute turns up. Hey, look at this. 2-hour confirming back up. Will it? Right? Will that thing just turn right back up? Hey, the daily scale, divergences. Awesome. We'll see right there. But this just means maybe a snap move to, I would say a good move would be 970, but ultimately I think it tests 1050. Am I willing to put money behind that one? Not at this moment. Man, was that it for a sell? I know part of me was hoping that the thing is, once you become like this, like once you really start to look at it, it's like you think I would have been unhappy if price went down here. I wouldn't be in calls, but if it went down there, I'd be like, okay, well, this might have a reversal signal. So if it creates a reversal signal down here, we'll have daily divergence. If we have daily divergence, then it most likely will rip to all-time highs. So it's not bad. I listen to the audiobook. Yeah, I'm trying to physically read. I've never been a reader. I just read like studies and little things, but I want to get reading like full books and stuff. Make a little library or something. That'd be sick. Are you repeating the same pattern from 2022? I would never say that history is going to exactly repeat itself. The better saying is history, what is it? Like history doesn't repeat itself, it rhymes, or history doesn't, what is it? What's the saying? Does someone know it? History doesn't follow the same words, but it rhymes or something like that. That's more how I would look into it. Is that pretty much it? Okay. Either way, the ending part's the most important, right? It rhymes. It's not going to be exactly the same, but we can see maybe similarities in people's behavior. That's more what I would read into. What are people's behaviors? Are they the similar behavior of last time? Are they the similar behavior of 2022? Are they the similar behavior? 2022, people were fearing 2022. People just came out of COVID. We just had a bunch of stimulus hit. Let's see. People were overall very bullish because of that stimulus. People didn't really think anything of inflation. And then one day, boom, things just happened. And then we started to see, hey, okay, we're going into a bear market because we're raising those rates, right? So the mentality was much more, I would say, greedy, used to upside, upside, upside. Right now, do you think we're at that point where people are like super greedy and like, yeah, we're going to squeeze, it's going up, 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 up? Well, I would say, you might say yes, and then I would just say, well, the PCC today is 1.0 and the CPC yesterday was 0.95. We have put levels that are equaling to about COVID lows. So they aren't behaving the same as 2022. But we could say the charts could look similar, right? We're still looking for the same things. We're looking for people to get overexcited. And I think that's the thing from 2022 and say COVID and say the financial crisis and say 2012 when we experienced something a little bit rough there for a moment. All these things are like, okay, what was the people's mentality almost every single time? Well, people didn't think bad things could happen. So if you see a bad signal that says, hey, we could see a big drop right as people are like, bad things won't happen, that's usually a recipe to look for, right? That might be the actual data point you're looking for, not necessarily the exact same in the charts, and vice versa. VIX suggests the 50 MA bullish for the markets. I have to agree with you. Not driving today. That's good. Okay, good. But tell Pops I say hey if you're ever driving him again, okay? Looks like to me it filled the gap plenty. I honestly think they're going to squeeze this thing and make shorts cover. I really do. And you're in the same thinking of me as me. And so I'm actually technically for the week betting on the riskier thing, right? So if I'm right, I'm betting on the riskier thing for the week. I'm saying we're going to end in the upward direction, maybe even closing outside of this move, right? But overall, for the month, I'm actually pointing towards the more high percentage thing at this point on the SPY. Why? Because I'm below my expected move in a positive trend that just went slightly negative, and we have to see if it can build back here. But as far as this week goes, I'm technically not betting on this week. I'm technically betting all the way into May. So that means I'm saying by May, we're going to be probably above 585. I know, Rajiv. You got a good ass memory, Luke. Yeah, and I think reading is just going to make that even better, right? Trust me, my memory is either really, really good or really, really bad. It's more so, does my ADHD trigger or not? And right when I saw secure opening, I thought, and you said driving, I was like, boom, say what's up to Pops. ADHD hit. Nice bull flag. Oh, I actually was looking at the 30-minute for Bitcoin. I don't like 30 minutes for Bitcoin, but you look at the 30-minute, and I was staring at this morning just going, oh my goodness. Like, oh man, if this starts to whip back around, it doesn't look good yet, right? It doesn't look good yet. It's curling down. It's getting below the 5. It's trying to take it back right now. If this thing can swing up, you might see a breakthrough moment, and this 2-hour might just be pulling back, and you might extend this move. Now, I'd watch out for little traps, right? We're still aware of those, but for the time being, if the 2-hour curls up and you see a strong enough move, no reversal signal in sight, that would be a good thing. Yeah, GME giving up the whole thing. That was one of the scenarios we went over. See if it holds the right shoulder. That'd be great. You just might have more time. And here's the thing. I'm pretty sure like GME insiders can buy today. I think it's today. The other thing is big moves happen on Mondays. They don't want a big move by Friday. Maybe Ryan Cohen knows that. I don't know. You never know. What if we went to 580 today or tomorrow? Well, potentially that would say we're just starting a squeeze. If we were able to hold above 580 by tomorrow, then I would say we're just starting the squeeze. Yes, Netflix. So Netflix went up 36,000%, I think, right? Like if you really look at Netflix from the grand perspective here of a monthly chart, and you look at Netflix, well, if you were using Netflix every day back in 2022 and you saw Netflix confirm up in a monthly chart, well, from even that curl up right there to now, you would be up 173%. But from when Netflix was worth nothing, you see monthly curl up into positive territory right there. You got to be paying attention to these. These are still risky things. You had no idea if this was going to work out. But this is the thing. If I find 10 companies that I like and I use or know that, hey, I like what they do. I like movies. I like this. I like that. I like Redbox. I don't know. Well, back then, if I would have made the decision and just said, hey, maybe even I didn't make a big decision. Maybe it was just $1,000, right? $1,000 into Netflix on that monthly curl up would have been worth 2,100, more than 2,100%. I just messed that up, but it's overall just like amount of this is the timing, and can you hold through big crap, because now you're 4,400% up, right? It worked. Good. But those are hard to see. You know, I can point those out in a chart, and it always looks easy looking back. But people are looking at Nike right now, and it's down at these levels. And yeah, it can get worse. That's the risk you're taking on. But what if it gets better? What if it gets worse for 2 years, then it gets extremely better in 3 years from that? And in 5 years, you have yourself a times 10 investment. It can happen. I think that's why big people diversify and are willing to take on even losers, because a lot of those ones that end up being winners just completely wipe out the losers. Still think it's unfinished business down there. Let's see. So those are great investments in the past. So let's look for those moments and see what companies you think. You think people will still use streaming platforms in the future? You think in the future we're going to just get rid of streaming platforms? Probably not. It's just, what are people going to migrate to? What kind of streaming platforms? Are you noticing anything in human behavior, right? Maybe I could look at some of those things. People really like podcasts. People really like streams. Hey, maybe if Netflix added a streaming portion, they'd make a bunch of money. Let's go, Tyler. If I was a day trader, what would I think of it right now? I mean, it depends on what kind of day trader too, right? I'm not a day trader, so it's even hard for me to just be like, oh yeah, am I gonna look at a 5-minute, See this thing maybe curl down and notice that there's divergence. So actually maybe upside's the play, but we still haven't filled the gap. Maybe we just filled this one. We throw up again and go down. I would say if this low's taken out, I think you head to this red line, right? So is my trade just a breakthrough kind of trade? Breaks here, take the play, take it down a couple of dollars. You know, there's tons of ways to think about it, but right now it also has a reversal signal that suggests, hey, upside. So these can take all day to play out though. So I know 0DTE probably wouldn't even be the play for a trade that looks like this and looks like this and looks like this, right? But I also know something else. Well, if we're below this line and we only have 2 days to get back within it, well, then maybe I could just take a call for 2 days right here. I mean, technically, the risk to reward is with you. It's within the monthly and the daily expected move. And then if I see that, hey, I can take profit, right? If that's the goal. There are ways to do it in a probably different way than using VWAP and all that kind of stuff. But maybe you still use this stuff for confirmation. Then you just say, all right, 68% chance to get up into this area in the next 2 days. Sick. You know, like, okay, cool. And then you just go, hey, I hope the odds are with me, because at this moment, it's just still risk to reward. So if you see it go, like this, not get there and then turn down, how are you going to react if it goes wrong, right? This is something we've said for a long time. You always have a plan for if it goes wrong. It's just if you're wrong with shorter expiration, you can be losing a lot more than a guy who's wrong on a monthly for the first part of it. You can lose way more money, way faster. So there's always a way up, there's always a way down, and that's the risk you're playing, right? No one knows what this, just so you're aware, not one person out there knows exactly what this bar is going to do right now. What if a million retail people with $10,000 each just went and bought the SPY right now? Oh my gosh, that thing would get some volume, right? That thing would get some volume. What if at the same time that volume kicks in, someone sells everything at a bigger rate? Some big fish sells all of their stock. Well, then that would fade, right? No one knows exactly what's going to happen. You can pay attention to order flow and things like that too. That's fine. You can probably make a good assessment. But even if you're making that assessment and everything in your strategy is saying, okay, yes, this goes up and I'm 99% successful when I get these type of signals, let's just do something crazy. Well, what if measles breakout happens the next day? Like across the entire country? What if 9/11 2.0 happens the next day? There still is always risk. No one knows exactly what this bar is going to do. I mean, unless you believe we're in a completely fraudulent market. Completely. I think people can control price. I don't think it's 100% fraudulent. I think it's more fraudulent than I thought. And I think people use big money to control stock prices. But that still is them assuming some risk, right? If they're going to risk and hold stocks up, well, what if one of those moments happens, 9/11 2.0? They would be hurt too. Did Wall Street lose money in all of the crises? Did Wall Street lose money in the Great Depression? The answer is yes. So they don't get it right all the time either. Thanks for your consistency. I appreciate that, Luke. Like, you have to understand that you're assuming some risk. So the better game to play is play when your things are all pointing in one direction and you go, okay, this is my moment where my edge is there. The probabilities are potentially with me right now for the trade that I'm going to potentially take. And then you sit there and go, but I know that it can go wrong. So have a plan for if it goes wrong, right? That will encourage risk management. You know what really has proven to be the number one factor in every single rich person who got rich from the stock market? I would say two things. I would say overall consistency, right? I would say consistency, but consistency doesn't have to have a huge deal with it if you can just survive. Survival has proven to be Probably the best way to make money in the stock market. Because yes, we talk about those unforeseen risks, but what about the unforeseen good? What about the unforeseen luck? What about the announcement that comes out of nowhere? What about GME popping off? Like, what about those type of things? Those things happen too. And if you miss those moments, you miss a lot of money. And these moments have proven to be bigger than these moments over time. You know how you can prove that? Look at a monthly chart. Over time, the stock market has gone down or up. It has gone up. So if I bought here, in 2009, and then I held through this right here in 2015, actually, right here in 2018, right here in COVID, right here in 2022, where would I be? I'd be up here. Surviving and handling emotion and being consistent with that is proven to be, I think, the best way to make money over time in the market. Now, option trading is trying to do that on a shorter scale, trying to figure out what's going to happen on a shorter scale. So it's going to have more variability. It's going to be a part of a lot of those big moments. Well, lucky to chance. Hey, I appreciate that. Thank you, Tom. Appreciate you, buddy. I look forward to seeing you over on Rumble. Just so you guys are aware, the Rumble link is down there. Go make an account over there. We're doing a Power Hour stream later this afternoon. We're doing it every single day, so come join us. Right? Now, the other thing is, just so you're aware, people who already come over to Rumble, thank you so much. A lot of you guys do. That's awesome. I really appreciate it. The other parts of that is I will be hopping on right at like an hour before the close. Okay, so just right when Power Hour starts. I have some things to take care of. I don't want to time crunch myself. If I can get on a little earlier, I will. The reason that it's different, Sid, is because it's a share. It's technically, you would maybe call it a share offering, but it's an offering with a direct goal. It's an offering where the company has told you what they are going to do with that money. That's different from, and that would even be something people are excited about. Buy more Bitcoin, right? That's the difference. AMC is always diluting just to pay for debt and things like that. That's a negative in my book, but it's a good thing to do. It's a great thing to do. Get rid of debt. Okay, awesome. You're trying to mitigate your risk to survive. What is one thing AMC has consistently done, and why I will not talk too much crap on AMC being in debt? Through all of what AMC has been through, they have survived. Think of it that way. And if you end up that company that survives ends up getting one of those 1% moments as they survive through COVID, survive through their debt right now, it's like they could do something. That's it. It would have to be extremely lucky, in my opinion, because I think they are, with how movies are and things like that, I think they're at more risk than GME. But I'm just saying, they survived. Pretty crazy. Like, we got to give kudos to companies that actually survived. Oh, great, Kyle. We don't need more people paying themselves. God dang it. Well, maybe with GME, right? Maybe with GME, because those people. Wait, hasn't Ryan Cohen like not taken a salary or something like that? Maybe someone could clarify for me. I'm not the biggest on paying attention to that all the time, but I'm pretty sure. I don't really pay attention to too many IPOs. I think they're just extremely volatile, and there's no way to really get an edge. I think it's just, hey, maybe you get lucky. If you like it, if you've done research on it and you like the company for a certain price, for a certain reason, then you sound like an investor, and that's great. But yeah, I'm like, if someone isn't necessarily taking money from the company that they've really built back and got a big cash storage on hand, that's a great thing. I would say paying them isn't the worst idea, right? Give them that incentive and say, you did good. I don't think that's a bad thing. People are going to read into that as a bad thing. Why? Because people don't want to have a lot of time. People don't want the squeeze to take more time. And that's just all it is. People want it to happen now. And then the funny thing is, all these people who are bottled up and have all this money, if they do sell at the right time for GME, if something happened, they're probably going to waste it, right? Most people, and I think this is a great phrase from the book, most people want to spend $1 million, not be a millionaire. Being a millionaire is the exact opposite of spending $1 million, which I thought was a very cool part to the book. Raw Dog, thanks so much for joining us, okay? Don't Raw Dog us here, all right? Say hi. Have you looked at Google today? I'm curious to see. Let's go look at Google. Google again, filling the gap, so that's a good thing. But starting to curl over on bigger time frames, right? 2 hour crossing down, still positive, still at the breakout area. This is something that happens. We see dips down to lower levels all the time in these type of bottoms. Dip down to low. Look at this. Low. Dip down to a lower level. Boom. That looks like almost like NVIDIA. Right? I don't think this low had much. Not really. But this low right here, look at this. Go all the way past the breakdown area. Fill this gap. And then boom to the upside. So you don't necessarily have to be like, oh, this has to be bearish. It looks bearish right now. See if it changes. If this, for whatever reason, just whips back up and curls up on this 2 hour, you might be breaking through that high and you might be squeezing. Right now, you're not. Very obviously not. But SPY's holding up pretty damn well for something that should be crashing. On some actress who says she is now totally full of herself, made Snow White about Palestinian cause and hating Trump and Trump support 110. The only thing that I heard was her bosses or whatever, the actual, I don't know if it was the production or whatever, they actually had to physically, she's an adult, right? Like, how old is she? Does anyone know? Like, if you're one of these people that, someone has to, check on your social media to make sure you're not posting anything bad for business. And and you're 24. Yeah, we need to stop this whole you're still a child past 18. You're still a teenager in that. It's like, no, when you're 18, you're out in the world. You're an adult now. You're not a child. You can't be. Sorry, world's pretty cutthroat. It's way worse off. You can maybe pull it off earlier, right? Like in the earlier parts, maybe the later parts of the 1900s, but now you're competing with everyone, so you got to come out at 18 and try things. You don't have to have your goal. I don't think. I think you just try things. That's what I did. I just tried things. I got my degree. I thought that was stupid. I tried college. I got my degree. Thought it was stupid, but I'm glad I played college sports because college sports taught me way more. Being a captain of a soccer team, being a captain of a pro team, those things taught me way more. Way more. Swing trading course, the full technical course. Duranto, if you want an early, kind of like an early buffer into it, like if you're still feeling pretty green about stuff and you just want an easy thing to kind of take to kind of ease yourself in before you take in all the information in the technical analysis course, that's the swing trading course, and it's always $50. Okay, that is one course that I sat and I looked at, and I was about to increase it back up to the price, and I just go, it's such a good thing to allow people for an extremely cheap price just to get some kind of dipping of their toes into technical analysis. And I think that's how we tackle it is we overall look at swing trading from a non-option perspective, but we do talk about that as well in there. I'm turning 33 this year. Soon. My wife better have my birthday present already. I mean, it's in like 5 months, but still. I expect greatness. I don't know how she's going to pay for it, but actually, weirdly enough, my wife's pretty awesome. She'll go through and create something and sell it on Facebook Marketplace just to get money for Christmas and things like that. What a lady. What a woman. Like, I'm like, you can just use mine. It's fine. Like, just you're taking the time to go do something. This. She's like, no, it's not the same. So then she does a bunch of stuff on Facebook Marketplace. help some people with social media and stuff because she used to grow social media herself. I thought that was cool. Where do you think Google is going down to? Depends. Why do you ask, NF? Let me ask that. What's your why here? Why? Why? I want to know why. Are you in calls? What's going on? Duck. Now you're just my daughter. So you kind of grew up in that weird era between the time before smartphones. Yes. I was the guy in college who was like, what the fuck is this Twitter thing? You know how you see those like Facebook things? What's the movie? The Facebook movie or whatever with what's his balls? You see all that stuff? I was the guy sitting in college just like, what's Facebook? Well, I guess we had Facebook slightly. Like I had MySpace. Because if we're saying, oh, Google's heading down dramatically, Google's oversold on the 30-minute, and I want to ask if Google's going to go lower so I can take a trade, I don't like that. I don't like that. But I would say if you're asking for, reasons of hopefully good technical analysis, well, you're testing a breakout area. You filled the gap on Google. Very simply, you filled the gap. If you can see positivity from here and the 30 minutes able to go positive, I would be like, okay, how does this thing break down? How do I get screwed? This. So if this happens, I can take it, but if it curls back down, that's bad. Right? And then I would go, what I want to happen is if I take something here, I'll feel much more safe if we get through this gap. 172. That's it. Right? You need a 2-hour to curl up to feel really comfortable. That's the structure I would see if this wanted to break down, right? Get some kind of support at this level, let people think, yeah, it's going up, then we go down like this, and then we create another point. But I think that's very unlikely. I think it's likely, but I don't think it's as likely as, hey, we're going to potentially see some upside here. More than that, I think it's more likely to see more upside, but that's not proven in the charts yet, right? That doesn't mean I'm taking a trade with Google. That means, hey, if this 30-minute curls up, I'd probably look at it pretty seriously and then have my plan for if it goes wrong. Right? You might not even get a bounce here, but if you do, you have a chance to take out this high, go make a new one if you can see a strong one. You're not far, far away, but you need to see a good one. You see a good move. Because if it's lackluster and you just see, oh, yeah, oh, and then it just turns right back down, you see a little thing like that, ooh, that's where you can drop down to lower levels. Google is not outside of a monthly expected move. So this is not one where the percentages are really with you, just so you're aware. Those people are printing. That's right, Angus. Man, I should have done it when I put out my tweet. Should have done it for Tesla when I put out my tweet. My tweet came out, right? Well, we'll give it the next day. We'll say right here, because I put it out after hours this day. So we'll say right here. That's where my tweet came out. Notice I did not buy Tesla, and I'm kicking myself. But the implied volatility, sometimes it's hard to make money with Tesla if it doesn't move sporadically. Sometimes it goes through periods of just chop back and forth that just makes you lose money over time. So I like my plays. I can't talk crap about my plays. They were good plays. I'm appreciative of them, and I apparently sold them at the great time. Now we're looking for, hey, can this thing snap back to the upside? There's ways to fall down here, though. You just curl up and you reject. Palantir back in the green? Where's Palantir? There you go. Yeah, you're just at the 5. A lot of these are just at the 5. Now, SoFi, a little more worrisome. DJT filled the gap. Still at that 5, pretty much. Amazon, getting off the 5. Very good. NVIDIA, hey, that thing dropped below the 5. It needs to see some strength. So that's not the one. But Meta had the 5, dipped below it, took it back. Awesome. Curl up, man. And then let's see something crazy tomorrow. Let's fool around down here a little bit more. I'm down. Build that liquidity. I'm surprised JP Morgan's still holding strong. Crazy, though. I think if we reject, we'll do it at 570. That's very possible. 570 was the key level, and you just lost it again, right? You lost that yesterday. 570, very obvious key level right now. Now, is it the most important for the day? Not necessarily, according to the options. 575, 570 still is a tick up, but you'd more so be looking at 575 up towards these areas. But people got pretty damn bearish this morning, right? Still holding at that 1.049 for the time being. Hopefully I'm not choppy right now. I did say I was switching to puts. Top, where were you? Come on, man. We're supposed to keep track of the Willow indicator, damn it. It's one of those contrarian indicators or something. VIX here, very, very nice to give us this curl down closing bar right here. So 6 minutes, and that will be a confirmation of the rejection, full confirmation on the MACD, full confirmation on the RSI, and confirmation with the price action all at the same time. This would be a good scenario for the 2 hour to turn down here. This is how you start some kind of squeeze. This is also how you create a reversal signal, right? Let's not just be aware of one side. Let's be aware of how this could actually go up, right? Even if we're going to go up in the stock market right now, well, if that 2 hour crosses down and then we cross back up, hey, that's what we're looking for right now. 1683, we get some kind of signal here, right? That would be enough. If I see that type of signal, hey, I might be trimming a little bit there, right? I might be hedging in some way there. Because if we fail that signal, we go like this, and then it goes, and then we fail. Man, that's how you get down to what? 1212, weirdly enough. So we're looking for this little area right here between 1504 and 1683. If this 30-minute confirms in about 5 minutes like it is right now. Alrighty. Anti-Willow ETF. Willow, we should do it. And we're going to put, it's going to be, it's going to be W-I-L. Will. Please, how do you configure the 5 moving average? Yeah, okay, so right here, you can just go up to your indicator and type SMA, right? And then you'll just click this guy right here, okay? And we did put this in the course, so you can get these on your charts, by the way. Just a quick video to get it on there if you like it. It's very nice. But yeah, you can just click this right here, and then what you'll do is you'll go into the settings of it, you'll look at the inputs, and then you just change this down here, this time frame, to 1 day. Right? It's gonna appear as chart. You want to put it as 1 day. And that's it. So if you need to rewind that, watch it a few times. Hey, that's good, Ando. You're paying attention to different things. That's good. I think it's good. It looks like we're seeing some bouncing here. I'm sure the volume's crap. Yeah, volume really going down here. We'll see. I don't think volume's the biggest deal for this. I know this was on light volume, but squeezes usually happen on light volume. It's just you like to see that big volume come in for 1 day. So that's kind of the problem with the upward move is this volume on these 2 days did not exceed this day right here, right? It didn't exceed these days over here, right? And that's a problem because those are where you ran into the resistance. So you really want to see another strong green amount of volume like this. That's my opinion on at least volume for the time being. You'll get management fees. Tesla rejection coming up right about now. Maybe. Possible. Volume's not really sustainable, but you would say volume wasn't sustainable here. And look at that. Just, ooh, that's a squeeze, right? Ooh, it just keeps going up. We'll see. 30-minute about to confirm up. That would be crazy, right? That's the less probable thing to see this week for Tesla. Say it's like if it's less probable to happen, there's more money to be made if it does happen. That's kind of how it is, but you got to make sure that your plan's not going wrong in those scenarios. One day I may set work. Wish you said that back then. Oh, sorry about that. Look like Head and Shoulders. So many stocks. Head and Shoulders or inverse? I don't know. I haven't seen. I'll have to go look again. Wait until it slows down and the bulls start coming in for Tesla. The bears. Yeah, I was gonna say, okay, bears. It might slow down and bears might come in, but we'll see. Like I said, I think this is a scenario where I'll kind of bet on the lower percentage for the week to bet on a good percentage for the month. NP. Sorry about that, Sid. Just like Raw Dog subscribed, I kind of raw dogged you on that. That's my bad. All right, we are now taking back that monthly expected move downside. Very, very nice. Let the squeeze begin. If the 30-minute curls up here, I think you have a good shot at that beginning. We're going to watch out for divergences towards the high. We're going to watch out for rejection at 575. 574.25 is our daily expected move, but 575, so that general area up in here is what I'm overall watching for rejection. If that does take place and I see the 30-minute rotate back down, I can potentially hedge. NVIDIA has dropped extremely deep and needs to see a big 2-hour rip to really convince me that it's going to see some kind of bigger upside. The 30 minutes too deep. We've gone over it way too many times. The 30 minutes just really deep. So we could have more time, but I'm not leaning towards more time there. I think that it might actually get that rip up, but that's just me. I'm not willing to risk money behind it. No signal telling me it should, so I just think it'll happen. So that's not enough of a reason for me to put money behind it. I know VIX is dropping. Don't forget, VIX has a reversal signal right now saying I want to go down on the 2-hour. So we'll see. SoFi, I think, was maybe the risk to reward for the month. You literally went down within 20 cents, I think, of a monthly expected move, and then you bounced. NVIDIA's curling up on a 30-minute, though. Exactly. You need to see, at least for me, like analyzing NVIDIA, I need to see a bunch of positivity there. It doesn't mean you can't like try, right? You can do whatever you want with your money. That's perfectly fine. Just know that that doesn't have a reversal signal, so that would be assuming a little bit of risk. You're kind of calling for a V shape without any hints of a V shape besides how the market is looking or how the volatility is looking for the moment. Volatility right now, good rejection bar confirmed below these areas. This is likely to, but still can go in the upward direction, but likely to turn the 2-hour down and most likely make a lower low. We'll watch out for divergence, which a divergence on the 2-hour might pop up if the SPY makes a 30-minute divergence going on into tomorrow. We'll have to see. No curl ups yet. We haven't closed above these levels. I mean, I think if you can hold 115, you're still not safe of some kind of gap down or something like that, right? It's never going to be 100%. You know I could grow this channel a lot faster to just be like, yes, this is going to happen because people are more attracted to that kind of analysis. But I'm trying to show you guys how a trader should actually think. And I think you should just be aware the game that you're playing is never 100%. So any kind of play you're thinking about taking right now, if it's NVIDIA 115, if that's your plan, blah, 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 have a plan for if it goes wrong. And that's something that we've just said over and over, right? How can the market screw me? What's the most likely way the market would screw me? What's the structure I would say for me to get screwed? And then if you map all that out, maybe even draw it on your chart and leave it there, you'll be really aware of, hey, if this happens, I need to manage risk. Survivability, survive. Do the signals up to 80. Nice, Sid. We like it. Little technical bounce here at the 0.5 fib on VIX. GME is dumb. What if I told you that I'm a mind reader? What if I just told you, and this isn't going to happen, right? This is not going to happen. But what if I told you I was a mind reader? And you just can't see into the future, but I can. What if I told you in 2 weeks GME would be at $100? If you knew that information, would you call it dumb? Or is it maybe just dumb right now? And maybe a good way to phrase GME is what I put on Twitter yesterday or 2 days ago. Try to read to you guys what I put on Twitter 2 days ago for GME. All right, let's see here. Let's see, what did we say? GME earnings. This is what I said on March 25th. GME earnings. You're probably seeing crash or squeeze or reacting. Best way to summarize earnings is things are not as bad or as good as they seem. But what's the goal? If it is bad, then is it actually bad for you? If it is good, is it actually good for you? Your friend here is actually time. Right? Now, what do I mean by that? Oh, people thought this was really good, but is it as good as it seems? Well, usually it's never as good as it seems. So we go down. Now everyone's saying, oh my gosh, this is absolute trash. Literally yesterday, everyone was like, buy GME. Today, everyone's like, sell GME. Do you think people are just emotional and maybe this isn't as bad as it seems? Well, that's where the question starts. Is it bad for you? Are you taking plays that this is bad for? Right? If I have an option for Friday, I would say this is bad for me. This is extremely bad for me if I have like a 30 call going into Friday. But something good happened and you were aware of the risk. Did you react in some way? There's a decision to be made up here. Maybe it was, hey, try to break even in case something like this does happen. It does crazy things. But is it as bad as it seems? The 30 minutes oversold. The 30 minute is still above the center line for the MACD. You're right by that 5-day moving average. If you do this, couldn't you see another moment like that? Is it really it's never as bad or as good as it seems. Think about Tesla. Oh my gosh, this is absolute garbage. Nope, Tesla's coming back. Tesla's going to rip. Oh, nope, not as good as it seems. Tesla rips down. Oh, this is horrible. This is the worst stock in the market. Not as bad as it seems because it's up 25% now. You just have to take into consideration what is bad for you and what is good for you. And if GME and Tesla, overall, you're just looking for those things outside of monthlies and you go, hey, I'll buy and hold the stock. I'll buy and hold the stock. Then this is good for you. But is it too good to be true? And are you going to get excited about it? Because this could go like that. Are you going to hold through that for it to be able to go like this? Does your trade that you're taking allow you to do that? Right? We got to start thinking about things in a way that's not every single day's price action really affects us. Your emotions are going to go down the drain. Now, I'm going to try to help you out daily. I'm going to try to help you out with that direction, right? That's the point here, is really read into that, right? Try to figure out what these shorter time frames are telling us. But we also need to be able to manage our emotions, and a good way to do that is to plan for good and plan for bad. And when it is really, really good, you can assume, hey, it's probably not as good as it seems, so maybe I want to take profit on the way up. When it gets really, really bad, you want to be the guy that goes, maybe it's not as bad as it seems. Do you know what people benefit from maybe it's not as bad as it seems? Well, it's pretty simple. These are the people who benefit. Right here. These are the people who benefit. Right in here. These are the people who benefit. Right in here. These are the people who benefit. Right there. Right? People were talking awful when we lost that 200, but they weren't paying attention to that we have a reversal signal. And look at that rip and roar. That's why a daily divergence, if you get a daily divergence, man, watch out. This thing will probably rip. That's why I'm saying, even if it does this, I don't care. Because if we get a daily divergence and that turns around, people are going to be so caught off guard. Momentum is going to be so built up to the downside and that it's getting weaker and weaker that it might tip over to the bull side and go wham and go to 630 all of a sudden. This is why we can't, this is why day traders are rough. When day traders come into the chat, day traders are rough because you're really trying to dictate on a daily basis, where survivability is tough on a day-to-day basis. So I'm just spreading things out. If I spread things out, I can give myself a higher percentage to be right. And I can give myself time to react if things go wrong. That's the big difference between gambling. I have decisions I can make in the middle. You can't make it when the ball's rolling around the wheel and bets are already done. That's the difference. You can manage money. Yes, Aaron, that is simply because people are not wanting to take risk, and people see green things, really green things, as less risky, as the least risky, as no risk. That's the thing. That's why people lose money in the stock market. That's probably the biggest reason. Is because people do not assume that there is risk in the market at all times. And you have to be willing to survive through that. So I build a strategy that gives me some survivability. I'm saying day trading doesn't have very much survivability on a stat to stat basis. But on the other hand, if you're one of those 5% and you can do that consistently every single day, you're probably going to make a lot of money. There are people who can succeed with it. I myself see myself as more of someone that can do this over time because I don't necessarily want to have my time to myself. So that's the big difference, right? I still like to have time throughout my day to spend with family because that's what I see as the more important investment. Lower prices, less risk for the most part. I mean, that analysis right there is probably half of what people do, right? That's probably what investors overall do. They wait for those little 10% pullbacks and then add money in. Maybe they add money every month, and then once they start to see pullback, they wait a month, and then they see it get down to a lower price that they bought it at last month, and then they go, okay, cool. I don't know. I think I like options. I don't know. I've always done it this way, and I just think it's a lot of fun. Yeah, I think it's a lot of fun. That's literally it. The way that I do things, I enjoy. So why would I try something if there's a risk that I don't enjoy it? You know, maybe it's completely the same. Maybe it's completely different. But I don't care what I'm doing now. I enjoy. So I'm not going to change things. Got to know when to hold them, know when to fold them. Yeah. And if it's an option, usually folding them and then trying to get back in later or looking at something else is the better option. I mean, look at JP Morgan. Got out of that one, found Meta and Amazon immediately. Yeah, I missed out on JP Morgan, but I executed the trades on Meta and Amazon correctly, so I was able to make money. That's great. Right? I think that's a perfectly good song to be playing right now. Right, Sid? I mean, if you're really just watching these zones, you immediately have better odds of being successful than what, 32% of the time? You immediately have better odds of being more successful than a black card counter, like a guy that counts cards. You have a bigger percentage than them. They only have like a 2% edge and they're able to be successful. Do you know why card counters are able to be so successful? They practice risk management. Risk management is the only thing that gives them survivability to keep them in the game to see those big streaks. That's great. So let's learn from that. This isn't just nonsense I'm speaking out. I want you to actually be taking it in and learning because even I'm learning more about this type of stuff. And I think it's amazing. I think it's really adding to everything that we talk about. So right now, I'm kind of changing my rules. I mean, you might take the course; it'll still suggest what's suggested more so for the bear market and for 30-minute, 2-hour, and daily signals. But now I'm really understanding that one problem I do make, one mistake I make, is I don't have enough time, and I'm someone who usually gives myself a lot of time. So now I'm going to potentially put in a rule for 2025 and really try this and just say, okay, spread out the risk management a tiny bit, assume a little bit more risk but make up for that risk by paying for time. So I'm buying higher extended out. I will only be doing 4-week expirations and up. So if you have an option and you're thinking about buying it, say, how much time do I think I need? And then add a week or two to that. If I see a 2-hour signal that could curl up a daily chart and I want that to get to, say, 580, well, I say that 2-hour signal, that could happen next week. Okay, I'm going to buy next week's. Or I could say, hey, let me buy 2 weeks. Hey, we're up towards higher levels now. See how getting that extra time helps? But I'm saying if I see a 2-hour signal that can curl up a daily, I would normally take 4 weeks. Now I'm going to add to that and potentially take 5 or 6. I'm going to really spread out the time in case we continue to want to bounce around all throughout here, but eventually end up in that upward direction by early May. I'm going to practice. Willow's going full risk here, guys. Where's able gap fills 563, then close at 565. Hey, man, that'd be sick if you got it right. Tesla nearly at the high. IWM, DIA. DIA looks perfectly fine. This would be such a squeeze setup if you break through this high. My goodness, you literally have a squeeze setup right in front of us. And if it plays out, right now is the timing. We can still head lower, and that's why we give ourselves more time. We understand it could go wrong. We understand this could just do this. Oh. People still shorting for the most part. Never go full return. Oh, what an iconic movie. What an iconic, ballsy freaking movie, but what an iconic movie. Notice Amazon saw a little bit of positivity. Look at that, 1%. Pretty light volume, I would assume. Not bad, actually. Not bad. Downside for Tesla, I think that's the exact opposite of what's happening right now. So downside for Tesla is not necessarily what I would talk about right now. Right now, you're getting confirmation on everything of upside. So to take a short position when I'm getting confirmation of upside is completely opposite to what I like to do. Now, this is a reversal signal that could be forming, but I still need to see that proven on at least enough indicators, enough reasons, right? The weekly expected move, all that good stuff. Outside the weekly expected move, okay, reason. RSI hasn't crossed down yet, no reason. MACD hasn't crossed down yet, no reason. Price action hasn't crossed down yet, no reason. This is the exact opposite. This is betting against a squeeze when this is a signal that is squeeze-like. This is literally betting against a short squeeze when short squeeze has high potential. That's what shorting Tesla right now is. Let me just be blunt with you. The indicators, everything is telling you the exact opposite of short. It's telling you, holy crap, you can see something really crazy. If you bet against every single 1% moment, you would lose all your money very quickly. If I say, yeah, this is a squeeze signal, but I think it's going to fail, so I short it, well, you know what signal always pops up in a squeeze? Something like this. So you're literally at the time where squeeze looks very heightened and probable. You're saying it's going to go down, though. I'm going to be the guy who calls it. The market's going to prove it. Tesla's going to prove it. It's going to curl down this MACD. Or could I just be like, hey, thank you for creating a divergence point. If this is a trap, then we're going to see momentum turn down. And then if this crosses, I'll have a reason. And if this crosses, I'll have a reason. And if this crosses down, I'll have a reason. Right now, there is no reason to short Tesla. There is no reason. Well, I won't say no. There's like one reason, and that's you're outside of a weekly expected move. That's it. Right? If I do these things, this is me seeing black 3 times and assuming that black's not going to happen again, right? This is me ignoring the actual risk to reward here. yeah, the risk is you do this, but the reward here is, ooh, this is already curling up. It's not saying this is happening right now. So the less percentage thing is happening right now. I don't bet against the less percentage thing. I wait till it tells me that this is the higher percentage thing. Do I take calls on this right here? Probably not still, right? It doesn't mean there's a decision to be made for me to buy as well, right? I don't want to FOMO in case it is a trap, but maybe I'm looking for if it is a trap. And I say, if that curls down, we see price action confirm, I see it at least on the RSI, I have 3 reasons, I can make my decision, and then maybe I can target gap fill. And maybe, since I think this will happen pretty quickly, right, maybe even by Friday, maybe I give myself 2 weeks as extra time. And then we get to that level quicker, okay, cool, you make more money, right? The value's higher. Yeah, GLD up again, right? This is a proof of you don't have to. It doesn't have to behave normally. It doesn't have to go into those ranges. This is why you're aware of the 30-minute crossing up into positive territory, right? That totally contradicts the daily being able to turn down. The 2-hour goes up to the high. Awesome. Where's my weekly expected move, right? Do I have a weekly expected move there? Can I go higher? Yes, I can. But if this goes up to this level, am I in this for 2 months, or was I saying this was all going to happen by the end of the month in a few days, in just a couple of days, right? If I gave myself that time of a month or two, then this won't hurt me nearly as bad if I still didn't maybe manage risk on the 30-minute as it went positive, curled up into positive territory. It failed the downward turn. So that was the first moment. Now this is a second moment. This is like, hey, okay, are we going to create divergences? Do I have 2 months out? Can I last if it remains here for a little while and then turns back down, and we see this by maybe the end of April? Right? I'll get a new week or monthly expected move. So if we turn down, we're very likely to go to the monthly expected move in April. For GLD, you're very likely to go to that monthly expected move for GLD next month. Just here's the thing. People are going to FOMO. You're going to hear great things about gold after today, and you might continue to hear that for a few days, and then gold will start to really drop off, and it'll totally switch. Come on, SPY, do the thing. I think it's in a good spot. I think there's a way that people could react negatively, GKL. But for the time being, positivity. Let's see if it can continue. A lot of people starting to shift back down into neutral. Shifting back down into neutral. This bar means a decent amount. Take you above the wicks. Take you back above that 571-ish area. Still some resistance in here. Let's see if we can break through. Look at the little micro in here. I bet 1-minute traders are like, I would say neutral is kind of bullish, and when you're retesting the 5 on your first swing down, right? I'd say it's rather still the edges in the bulls, and you'd have to say that with how the 2-hour is positioned right now. This is why I'm just like, I'm not going to sit here and lose my mind on all the mess. I'm just going to keep my overall assessment until my risk management needs to kick in. If my risk management kicks in, okay, it kicks in. I take my profit, I take a loss. That's how it's going to work. And then I'll risk not being in a potential random squeeze, and that's the opportunity cost risk. But opportunity cost is a very good thing to risk. What I'm overall thinking about is I bought the time so I can hedge against it at certain times until I see that squeeze moment. We have now reached 10:01 over here for me in the Midwest, so I will be hopping off at this moment, but we're seeing the 30-minute start to curl up. We can look for rejections. We can look at volatility. That gave us a little hint saying, yes, the 2-hour might cross down. If all of that stays the same, then the SPY might start to rip here. We'll see, but we're aware that it can run into problems here. we're aware that it can run into problems up here. So let's just pay attention out there. We get more data tomorrow, and tomorrow I think is the data that I'm most interested in, and that is personal income and personal spending. Personal spending is something very, very important that I think people will read into a lot. The strength of people out there. Are they still able to spend money? That's something I'll watch. But if you guys want to join us for another live stream, we will be live for the close today over on Rumble. The link's right there in the description. Go follow it. Hit your account settings. Make sure notifications are on, or just put a little calendar note and remember, hey, we're live with Money Making Market over on Rumble for the last hour of the day. So come join us, okay? An hour before close, just come click on that account, and hey, we'll be there streaming. You can come ask questions, do all the things that we do here, pay attention to what's most likely to happen next, and keep these probabilities in mind with always paying attention to risk, because risk management is what can give us some survivability in this market, and survivability might be what you need in order to catch some kind of squeeze. Thank you guys. Have a great, great day. I appreciate you guys liking, subscribing, doing all that good stuff. Let's welcome in those new members, and I will see you later on Rumble. Peace out. I had a lot of spit there. Sorry about that. Peace out. Sound like I'm a retainer. Peace, guys. Have a good one. I'll see you on Rumble later.